We're ready for our next session, and I'm sure you've all pretty much heard or read about the various economic diversification programs going on in the GCC and the huge amounts of investments being made by the GCC government. There is a strong private sector element to this as well. So this session is on GCC government and private sector cooperation and investment to achieve success in economic diversification program. We have an excellent panel to discuss for the next 30 minutes. And this session will be moderated by Adel Hamaizia, Associate Fellow, Middle East and North Africa Program of Chatham House. Welcome to all our panelists, and I wish everyone a very enjoyable session.
Thank you, Ed. I think everybody can hear me. We're good to go. Well, good morning, good afternoon, good evening, ladies and gentlemen. Welcome to the first interactive panel session of today's UK or GCC UK Trade Summit 2021. As Ed kindly introduced, my name is Adel Hamaizia. I'm an Associate Fellow at the Chatham House MENA Programme. I work closely on political risk and economic issues in the GCC and sort of broader MENA. I'm delighted to be accompanied by an august and distinguished panel today. We'll be discussing how GCC government and private sector cooperation and investment help to achieve success in economic diversification efforts. Now, before introducing our speakers, just the session format, some housekeeping, and a very brief event intro, if I may. So rather than regimented interventions, we'll have a more dynamic, I was saying to a colleague as dynamic as Dubai, a more dynamic, fluid conversation with our speakers today. Virtually backstage, I've already welcomed healthy interruption, two fingering and disagreement from and between speakers. We invite participants and colleagues in the audience, you participants in the audience, to submit Q&As throughout the session using the Q&A function in Malga, and I'll aim to incorporate the most session relevant questions into the conversation. Short questions, no essays, please. Simplicity, as we know, is the ultimate sophistication. Feel free to add your name and affiliation too, and you'll get an appropriate shout out. You can tweet and join the conversation using the hashtag @GCC UK Trade Summit. So this morning we aim and we seek to diagnose and seek updates on how and where GCC governments and private sector are working together to achieve this holy grail, which is of course diversification, what some of us colleagues call the de-rentierization of the economies in the region. And this is the true crucible for the region. We aim and hope to hear about the response to COVID, the role of private investment, PPPs, investment, FDI, enhancing private sector ecosystems, the spurring of firm level dynamics, and of course some opportunities and perhaps challenges when it comes to UK GCC trade and investment. A couple of very quick stats and points. So we saw IMF growth forecast for the GCC revised upwards earlier this year from 2.3 to 2.7% as a result of the vaccination inoculation successes, Bahrain and UAE notable mentions, and 3.5% non-oil growth is expected for 2021. Of course, the oil price has been steadily increasing throughout the year. That's happened before, hasn't it? This morning we're at $72. So at the beginning of the year, we had a sort of politico-economic booster, as I'd call it, which was the Al-Ula Declaration, which among other things reopened travel, tourism, or travel, trade and investment, though it's been modest thus far, between Qatar and the three other GCC states. We saw the UAE's Amal Hope probe reach Mars in Feb. The GCC as an organization, my colleague who spoke just before Dr. Abdulaziz, of course, entered its 5th decade just last month. And we have the Expo to look forward to later this year. I counted in just 94 days. And the big one, the World Cup 2022 at the end of next year, or exactly 510 days. So these events should, we hope, support post-pandemic recovery and a path to building forward better, not building back better, as my colleagues at the United Nations always push. And of course, keep in mind that we have $1 trillion plus worth of ongoing real estate mega projects, trillions in regional sovereign wealth fund controlled by the region. And of course, the pandemic has catalyzed investments and commitments to healthcare, digitalization, transportation, food security, among others. Now, to introduce our speakers, we are delighted to have today, based out of Dubai, Saud Al-Shawareb, Managing Director of Dubai Industrial City, one of the region's largest manufacturing logistics hubs. He spearheads efforts to strengthen Dubai's knowledge-based economy and position the Emirate as a global destination to advanced industrial activity. Under his leadership, we've seen more than 280 factories, 750 business partners across sector-specific economic zones. I was looking up the website just yesterday, super impressive. He holds an MSc in Engineering Management from the University of Wollongong in Dubai and a BSc in Civil Engineering from the University of Sharjah. We have Gabriella de la Torre, Director of Consulting at CBRE, also based in Dubai. She's experienced in advising government entities, developers, and investors across MENA, and leads a wide range of consulting and advisory assignments, and has advised on real estate developments spanning over a modest 1 billion square meters of land. She's most recently been working on growing CBRE's consulting team in the region, as well as building the company's business in Saudi. Last but not least, an old friend, Dr. Ashraf Mishrif, speaking to us across the Red Sea out of Cairo. He's the Oman Chamber of Commerce and Industry Chair in Economic Studies at Sultan Qaboos University. Prior to that, he held positions at King's College, Anglia Ruskin, Qatar University, and has also worked outside of academia, alhamdulillah, in a number of executive posts at the Egyptian Embassy in London, at the EU Med International, and at Boston Business Management School in Singapore. So what I'd like to just start by sort of, kick off the conversation, if I may, provide intellectual scaffolding, as it were, no pun intended for Gabriella. If thinking about the pandemic, how has it impacted private sector investment and economic diversification in the GCC? And in your opinion, from people you speak to, have the government supported sufficiently? And whoever wants to kick us off will make this more fluid, so we can interrupt and so on and so forth. Who wants to kick us off? No shyness, please.
I'm happy to start, or go ahead, Saud.
Gabriella.
Great, thanks. So I guess from a real estate perspective, it's very clear that we have felt the impact across all sectors. I guess the hardest hit would naturally be hospitality, retail, and office sectors, just as a result of travel and movement restrictions, capacity limitations, social distancing requirements. However, one of the few exceptions I would note here is the industrial and logistics sector, and I'll probably let Saud go into a bit more detail on that from what he's saying. But that has been largely off the back of the growth of e-commerce, as people have, continued to do online shopping as they're stuck at home. And naturally, from an investment perspective, I think largely what we've seen in the past year is a more of a wait and see approach among investors in the real estate sector more broadly, with less numbers of projects launched, projects that are in planning and early construction, again, reevaluating their offering to consider the impact of the pandemic on what people want from an end user perspective in a post-COVID environment. So that has, kind of put a damper on, or maybe on decisions around investment in the past year. However, when we're looking at government support, I think that something really interesting is that a lot of the initiatives that we've seen have not been just to support economic recovery, but beyond that, to really drive economic growth coming out of this pandemic, right? And so in the example of the UAE, for example, a lot of the long-term initiatives that we've seen in terms of foreign ownership of businesses, the range of new residency visas that were launched in 2020, all of that has helped to bolster business and consumer confidence. And that has then trickled down into real estate, where we've seen residential price increases in the past 6 months, which was also unheard of even previous to the pandemic. And even things like S&P raising the outlook for MR properties from negative to stable. So we have seen that, again, those government efforts have really helped in terms of getting consumer and business confidence back to previous levels, and to really even, again, supporting further growth beyond pre-COVID levels.
So much, Gabriella. I'll ask Saud or Ashraf to come in, and if you can remind me, Gabriella, I may come back and ask for your opinion, particularly on the Arab tech episode, but we can come back to that. Saud or Ashraf, did you want to?
I will add to what Gabriella mentioned. Actually, we've noticed during the pandemic last year, the UAE as a country were in lockdown for 3 months only. And successfully, I think our rulers, the government, worked very hard in bypassing the pandemic. And what we've noticed also from the government, because of a strong e-commerce / industrial sector with high-end infrastructure, talking about an example of Jebel Ali Port, that their operations were, during the pandemic, were 24/7 operating. We have a government entity that is located in Dubai Industrial City called International Humanitarian City. They've expanded and supported more than 100 countries around the world by exporting testing kits, COVID-19 testing kits, gloves, masks, and related items to more than 100 countries around the world. And we've noticed also the government food security and the arrangement, making sure that all hypermarkets and groceries in the country will not run out of items. And I think readiness of high-end infrastructure with warehousing facilities. Really, we had a stock of more than 6 months in terms of food and medical tests and medicine that covers the UAE population and also to GCC. As an example, I might add with IHC is Unilever, their personal care factory in Dubai Industrial City, supplied sanitization products of Lifebuoy brand for GCC and MENA region countries from Dubai. So Alhamdulillah, UAE as a country with the high-end infrastructure, we have the capabilities to cover local requirements and neighboring country GCC and MENA region requirement. So Alhamdulillah, this is mainly because of the strong vision of the government and the support we gave to our, and the partnership with the private sector to making sure that we achieve those achievements.
Thank you so much, Saud. Ashraf, any Oman specific or GCC wide observations on this topic?
Yes, indeed. I think I can elaborate on Oman. I just finished this month a research project on impact of COVID-19 on the Omani economy. And what we got at the end from our primary data collection and the analysis of data and the surveys we conducted is that the impact of COVID was not as bad as we expected at the beginning of the crisis. Our analysis shows that the manufacturing sector was very resilient and has done well during the last year. Over the past 12 months, when we looked at the financial statement of 17 listed companies, manufacturing companies on Muscat Stock Exchange, we found 15 out of 17 have made profit during the past years. We didn't expect these results at the beginning of the research. Some of them actually achieved 450% growth over 1 year. They have never experienced that before. And
was this a health company? Was this a company selling PCR tests?
No. No, but I think the demand because of the global lockdown, I think companies were adapting to local demand, and they were increasing their output tremendously to compensate for the lockdown, and which lasted for a long time. The other thing is companies were more adaptive to the crisis, and they introduced new techniques and new measures to upgrade their facilities and to increase their production. And at a very short pace like that, I think this shows the capacity of manufacturing sector in Oman to deal with such a crisis. The other important element that we realize that the transport and logistics sector both have done very well during this pandemic. There was some disruption, of course, at the seaports and sometimes at the airports, but overall, almost all transport and logistics companies have performed very well during the pandemic because of the demand, local demand, increasing local demand. What was interesting in terms of impact is that the ability of government to adapt and to change, regardless to the attitude of the government, was very surprising. A lot of innovative ideas, a lot of innovation came out of this, particularly in the IT sector, in the fourth industrial revolution technologies across the sector. Was surprising in Oman. Yeah. In terms of government response, the government have done very well in terms of issuing measures from the very beginning, with 20 billion Omani riyals being pumped in the economy in the second month of the pandemic. So this was followed by quite large amount of measures that have actually helped companies to go through the sector. The most important is the attitude of local authorities rather than the central government to help and support small SMEs on the ground. This was very important measures that have helped a lot of small companies to actually overcome.
Dr. Ashraf, if I may. No, thank you so much. I think that the $1 trillion question in Oman is probably, sadly, the poster child for this question, is how to propel economic growth and diversify economies while achieving or aiming for fiscal sustainability. And we've just seen the Tawazun program in Oman probably stutter after some recent developments on the ground. So that's something I think we have to think about, and that the role of debt markets is maybe beyond the scope of this discussion. But I'd like to move to another thing which is central to diversification, which is FDI, something which is central to UK GCC engagements and beyond. So just, some brief comments on, from whoever would like to pick this up. What is the state of FDI in the sectors you're looking at, whether it's UAE or GCC level? And what do you think is needed to spur these investments? I'm not talking about domestic. I'm not talking about state-owned enterprises. It's about foreign direct investment. Is it infrastructure, regulation, finance, expertise, PPPs, frameworks? Is it, what is deterring, or what could attract more FDI to the GCC? And we'll come back to where the UK fits into this. Who'd like to touch upon that?
I can start if you.
We'll go the other way, please, Dr. Ashraf.
Foreign direct, when we look at the global FDI map, I think we realize that the Gulf hasn't actually attracted as much as we expect from global FDI. The percentage is quite humbled in terms of global FDI. But when we look at individual companies and individual cases, we can see countries such as the UAE, Saudi Arabia, Oman are doing well in terms of attracting FDI. When we look at the share of Oman, for example, last 2 years ago, attracted almost 7 billion Omani riyals of FDI, which was a huge amount of capital coming into the country. We have a stock of 15 billion Omani riyal of FDI, mainly invested in the oil and gas sector. The problem with FDI is a very sector specific, mainly centered in the energy sector, and this is gives a more of imbalance between the different sectors of the economies and how they benefit from FDI. If I talk specifically about Oman, the vast majority of fund was made by the UK. The UK is the largest investor, almost, as far as I remember, 55 or 59% of total FDI last year in Oman from the UK, and this is quite significant number. The problem is that the two sectors, oil and manufacturing is absorbing almost over 90% of total FDI. And there is a need to diversify and to guide FDI in non-oil sectors, in particular the service sector.
This is the challenge. This is the challenge indeed. Absolutely. I'm going to go to Gabriella, Saud on this. If you could come in on real estate or the industrial sector particularly, what does investor confidence in FDI look like right now?
If may I comment on this? Actually, we'll go one step backward and see what the government did in the past 6 months to 1 year, where rules and regulations has changed, and new announcements were announced by the government. And there were changes first starting on ministry level, where Ministry of Economy today is having 3 ministers. We have the introduction of Ministry Moyat, which is the Ministry of Industrial and Advanced Technology, which really drew the roadmap on where the government wants to go. Today, a few months back, Operation 300 billion was announced by the government, where the outcome of this initiative is to increase the turnover revenue or economy figures to jump from 133 billion dirham to 300 billion dirham by 2030, which is mainly generated from manufacturing and logistics sector. So also, in addition to that, His Highness Sheikh Mohammed bin Rashid announced also through Emirates Development Bank, which is part of Moyat, to fund an allocated fund of 30 billion dirhams to support attracting foreign direct investments, to support local SMEs in manufacturing sectors, to support them to automate their manufacturing process lines. So in addition to that, the government on 1st of June announced that there will be 100% ownership on UAE companies. So you don't need to establish your business as a multinational company. Previously, you need to have a local sponsor or a local partner with a 51%. Today, in certain industries, mainly in advanced technology and manufacturing industry, today you can easily own your business 100%. So this really gave a boost in terms of attracting foreign direct investments in specific, talking about manufacturing, and having the complement of advanced infrastructure really supports the industry to establish their headquarters, regional headquarters and manufacturing facilities here, and to focus on export. Today, the UAE, I'm proudly saying, we are not only an importer, we became an exporter. We have companies exporting food, different items to different countries around the world, talking from the US, Canada, to Australia and New Zealand, through Jabal Ali Port and Al Maktoum Airport. And just to wrap up, having such infrastructure, supporting such businesses, really attracted manufacturing facilities. During the first 6 months, we've noticed this demand happening in Dubai and within Dubai Industrial City, where you can export your product to 2/3 of the world population within an 8-hour flight. So this really helps investments to move to Dubai and UAE in specific.
Thank you, Saud. In fact, you mentioned an interesting thing, and it just triggered something, which was you mentioned regional HQs. And what we are seeing is, I think, in the spirit of dynamism, more competition among GCC members. So beyond the cooperation in GCC, Gulf cooperation, competitiveness, coordination, a competitive advantage, communication. Because Saudi Arabia, of course, launched their Project HQ for particularly in the consulting space, and I'm sure Gabriella may have something to say about that. But also when it comes to labor market, visa policies, golden visas and sundries, and then of course the VAT, which is something else. So there are areas where I think we need to see more coordination, but I still feel that competition is indeed healthy. Gabriella, in the real estate space, what does FDI look like? And I'd like to come back to some specific real estate questions in a second.
Sure. So I think one of the things I would like to highlight kind of to start off is that real estate has historically been one of the top sectors beyond oil and energy for FDI within the region. And not only FDI coming into the region, but also intra-GCC investment. Real estate, again, figures as one of those top sectors. And this, again, highlights the nature of the real estate sector as not just a target sector for investment in and of itself, but also its importance as an enabler for other sectors and an enabler for the wider economy. We at CBRE recently launched and published a global investor intention survey. And so out of that survey, what we've seen is that there is broadly a positive picture of recovery in terms of investment in real estate, not just in the region, but at a global level. And most investors that were surveyed actually indicated that they do intend to deploy more capital worldwide in 2021. And so I think that's a very positive sign overall and for the region more specifically. And in terms of investor choices, I think one of the things that we're also going to see more and more of is a greater focus on the amenities, the environment that individual real estate projects have to offer, because experience has just become more and more important in terms of what residents, employees, or visitors are looking for within the real estate space and within the buildings that they interact with on a day-to-day basis. And interestingly, I think another thing that we will see a greater importance on is environmental and social governance, which hasn't been so much of a consideration in the past.
You preempted a question, Gabriella, but I'm going to push you in a second, please.
Yeah. And so these are just some of the things that we've uncovered, again, out of the survey that we've conducted at a global level. So in general, I think we are seeing a positive step forward in terms of potential FDI. But again, as you mentioned, Adel, there's still some key elements that need to be in place in order to support that investment. And so I think what we see at a global level in terms of requirements to support investment in real estate, it doesn't really change in this region, right? Really about transparency, having clear regulations, protection of ownership rights, all the way down to quality of life, residency considerations, and definitely affordability. And again, different GCC countries are at different stages in terms of that maturity, but in general, I think we're seeing a positive move in the right direction.
Absolutely. I'm going to ask for sort of quick questions and quick answers now, and some specific ones, with reference to sectors and areas that you look at. You actually touched on one area, Gabriella. I'm going to come back to you now. So just a plug for the benefit of colleagues. You're working on some of the largest and most significant projects in the region. DIFC, you work with PIF, Qidiyya, NEOM, Royal Commission of Al-Ula, and so on and so forth. A difficult question for you. So, do you feel that some of these, if you like, these state-owned enterprises are crowding out private sector engagement with respect to some of the real estate developments and tourism and hospitality plans and ambitions? The second question is, you touched on ESG. Dubai is always a bellwether, a leader when it comes to embracing trends, sometimes gimmicks, sometimes really ahead of the curve. And to that end, do you feel that ESG is going to become a disadvantage from a cost perspective and a cost imperative when it comes to real estate developments and attracting FDI? And where does that fit in? Because we're hearing a lot about the role of construction when it comes to carbon emissions, and 4 of the world's top carbon emitting countries per capita are, of course, in the GCC. So any thoughts on those two would be great.
Yeah, so I think on the first point that you mentioned, regarding a lot of these mega projects that are being led by kind of public entities, and we see that a lot in Saudi. I think there is really a push in the broader region, and again, talking specifically about Saudi Arabia, to support private investment and in real estate specifically, right? We haven't seen too many instances of PPPs in the real estate sector or in sectors outside of kind of energy, oil and gas in the region to a great extent. But there is kind of a wider push at a government level to involve the private sector in a lot, if not all, of these mega projects that are being launched. Again, PPPs are a central pillar of Vision 2030 of the National Transformation Program. And recently, the government launched the Sharik Initiative, which is aiming to, again, enable $1.3 trillion US of investment from the private sector by 2030. So I wouldn't say that the public entities are crowding out the opportunities for private sector, but they are in many ways enabling that, right? They're kind of creating this critical mass, this buy-in into these projects that also gives a certain level of comfort to private investors and to third-party, for example, developers, et cetera, to get involved in these really large-scale transformation programs within the country. So I do see that as a real opportunity for collaboration moving forward. In terms of ESG, so I think there's always been kind of a question mark around, the real value that you can get out of specific buildings when they're, kind of labeled as LEED Platinum, LEED Gold, or any of these kind of green building classifications that we see around the world. Nonetheless, we do see that particularly among multinationals and corporates. Even I think within the Dubai government entities, it's one of the requirements, right, to consider green buildings whenever they're choosing their potential office location. So it is being driven, let's say, by broader investor push, I would say shareholder push, to consider these things as part of wider ESG objectives within different companies. So I think that that's just going to continue being the case moving forward. It's just going to become more and more important to demonstrate that you are considering the environmental and social implications of all of the business decisions that you're making.
Great, thank you so much, Gabriella, for those insights. I think we've got quite a shy audience, so please do feel free, like I say, to put questions forward to our panel here. But I'm gonna continue on until we get more from you guys. So Saud, you said a little bit about what the Dubai Industrial City does. When I was living in the UAE, I used to drive past. It's a wonderful place. It's created a lot of value. You mentioned the 280 plus operational factories, a billion, I think it's 1.2 billion plus of direct investments, 2.3 of indirect. And I've read about Al-Baraka Days, the road of food security and seafood throughout the pandemic. Could you tell us a little bit about what sectors are emerging that we didn't see before in the industrial city? And specifically, if you could say something which is dear to my heart, but the integration of local suppliers and SMEs. I've read about your In5 platform, which helps startups, etc. So any insights on this area would be most welcome.
Sure. Actually, talking about emerging sectors that we have, very briefly, in Dubai Industrial City, we've master planned the development into 6 major zones, which is food and beverage, base metal, mineral, transport, machinery equipment, and chemical zone. What we've noticed today, and again, going back to the government initiatives and the direction that we are seeing and the change in on ministry level, we have a Minister of Food Security, Her Excellency Mariam Al-Mheri, is spear leading food security. And what we've noticed today, government and these things, the private sector has more appetite today after what happened during the pandemic. Is we've noticed F&B sector is growing because of strong cold chain logistic network and infrastructure. Specifically, I'll talk about Al-Baraka Date. They export date products from date sugar, date powder, syrups, date itself to 79 countries around the world. And their products are mainly used by multinational chocolate and protein manufacturers in Europe and US. So this really gives a boost that F&B is not only focused locally. We are importing raw material today to other countries. One of the things that I might add as a sector is the health sector. We've noticed we've got, from the beginning of the year, few inquiries and medicine in specific factories that are interested to establish in Dubai and within Dubai Industrial City. So this demand has started to pick up, and I think what supported this decision is mainly ease of doing business, availability of ease of attracting talent to Dubai to live, work, and play here, and the mature government of accepting such manufacturing facility, very specific and medical field. We've noticed also a big spike in e-commerce, mainly talking about cold chain storage facilities, and because of the close proximity to infrastructure, ports and airports, and main roads connecting GCC, really this gives comfort to private sector to invest more in it. And what we've noticed today, the industrial sector in Dubai and the UAE have reached into a big maturity level where you will notice that you barely find wastage being generated from those industries. And today in Dubai Industrial City, we have factories from asphalt production, block and paint, into recycling logistic facilities that we have. So the full supply chain is in one development. So we barely see wastage being generated. And in addition to that, in the past 2 years, we've noticed that people are upgrading their production lines to go more automation, applying new technologies in production that reduces manpower, reduces operational cost, reduces wastage, and you maximize the quality of your product. In addition to decarbonization strategies that we've found government and private sectors are moving to by implementing solar and thermal power, renewable energy in their operations, where today DEWA under the Shams Dubai initiative, in Dubai Industrial City, we have more than 15 megawatt is being generated on a yearly basis through renewable energy from our business partners. And on Dubai level, we are talking about thousands of megawatts that are implemented by private owners, private sector, to be more green in their operations. Absolutely. So this will really reduce carbon emissions and will increase will increase efficiency in operations.
Thank you so much, Saud. I'm going to come back to you in a sec, but if I could just ask Ashraf very quickly before I go for sort of final wrap-ups and incorporate a question from the audience. Ashraf, very quickly, could you I know you've been looking at the role of FDAs in Oman. How does this fit in within the UK context, given the UK GCC negotiations at the moment?
I think there has been some negotiation regarding an FTA between the UK and GCC. And as far as I know, there is also a mandate from the Omani government to enter into negotiation with the UK regarding an FTA. There is a recognition of the importance of UK as a partner to Oman, both in terms of FDI and in terms of trade. One important issue is that the new Omani government, under the leadership of Sultan Hamaizia, is trying to change the investment environment to make it more attractive and conducive to foreign direct investment. They changed the investment law last year, and they introduced new measures to increase the percentage of foreign ownership, and now is 100% foreign ownership. They changing the procurement laws, and they changing some of the we call it streamlining the procedures to allow foreign companies to operate through a one-stop shop. All these procedures actually is helping UK companies to enter Omani market. What is important now is the trend of Omani government to move to non-oil sectors, particularly in manufacturing. And there is a focus now on the DOC, especially economic zone, and Musandam. There is a lot of activities happening in Salalah, special economic zone, and Sohar. What we also realize the importance of establishing and expanding the infrastructure in free and special economic zone as the major for FDI. The government is doing promoting DOCMA as a new hub, both in terms of logistics and in terms of manufacturing hub. There is also an important element now to allow private sector to enter into partnership with private companies in the UK. And we can see some activities done through direct communication and through the bilateral relationship between UK and Omani government. So there is an attempt to push FDI to become a catalyst or to become an engine that drives economic development and the growth. One important element here is that the government cannot be the only partner in this, and the private sector has to step in and to take the lead in this activity. Private sector is more adaptable and flexible, has the capacity to invest more investment. And I think in Oman is doing well. The share of the private sector is increased to 51% in GDP, which is quite significant in terms of in the GDP.
Thank you, Ashraf. The time flew by. We got one question, and I'd like to ask you to sort of incorporate it into your last comments in roughly a minute each. I've already been naughty by going over a couple of minutes. What I'd like to ask you to do, Gabriella, Saud, and Ashraf, and thanks so much for the wonderful insights thus far, and I think it's provoked loads of thinking for the rest of the day. If you could, in your sort of last comments, if you could maybe sort of tell us what you think that British companies should be thinking about with respect to the sector or space that you're looking at. And we got a question from one of our participants that asked if there are any specific projects that you welcome inquiries or investments in. And I believe this is an active investor who's asked the question. So in your sort of last minute, if you could just sort of wrap up and share thoughts on any of these topics. We'll start with Gabriella.
Thanks, Adel. So, look, I think as we touched on before, the real estate sector is a very interesting sector to look at from an investment perspective. Again, from the individual investor looking to purchase perhaps a secondary home or a primary residence, all the way up to potential opportunities for PPPs. I think one of the important considerations, again, is timing and the right kind of asset class that you're looking to invest in. And so a lot of those things are questions that we help our clients answer in terms of where is the best kind of investment opportunity depending on your individual requirements and targets. But there are definitely opportunities, I think, across the board. And again, I would highlight some specific asset classes. Again, industrial and logistics is one that we've seen a lot of opportunity for moving forward, and some other alternatives that we think could potentially continue to grow, such as retirement housing with the introduction of retirement visas in the UAE. But definitely, I think still very much opportunities for future investment in real estate within the region.
Absolutely. Thank you so much, Gabriella. Ashraf?
We have in Oman, we have 5 main sectors that the government is is focusing on at the moment. I think is paying a lot of attention to manufacturing sector, which is key to drive economic development and expansion. In manufacturing, I think there is a huge potential for renewable energy as upcoming sector, and a lot of investment, a lot of projects is being initiated and under ongoing in Oman and in the GCC. In the manufacture, we need to take or to maximize manufacturing value added from natural resources in the GCC. And we have silica, we have minerals, we have a lot of mining activities is going on in these countries, and we need actually to explore more opportunities to take advantage of this what we call it land or natural resources. Huge sea coast with fishing and marine activities that has not been exploited in the GCC, and I think fishing industries has the potential to grow significantly in the coming years. Petrochemicals, of course, is well-established industry, but they do not. We need to focus on the supporting industries for this huge sector, and the potential for growth is significantly high. What we also need to look at is the food security. And the number of projects that is being establishing in this sector is rising significantly. Over 5,000 companies has been created in the private sector in Oman in the past 12 months. Most of them are dealing with manufacturing and manufacturing related activities. So I think the potential is significantly high for British companies to step in and to have share of this huge expansion in the region.
Thank you so much, Ashraf. Saud, last word to you. What does an investment vaccine look like? What are the projects on offer at the Dubai Industrial City? What would you recommend British companies and investors look at?
I think food security is we have 23.5 million square feet of land dedicated for food manufacturing and cold store chains. So I think today the label of made in UAE will add value to UK companies that will establish food manufacturing units, in addition to mainly attracting very high-tech advanced technology manufacturers to establish also their factories here. As part of the Dubai Industrial Strategy 2030, we really would like to attract also companies in medical field, in aluminium field, and in aerospace. So those are the 5 sectors that we in Dubai and Dubai Industrial City are really willing to collaborate with UK companies to open their second manufacturing units or office space in Dubai to do further to have further growth in their businesses, inshallah.
Thank you so much, Saud. I wouldn't dare to try and wrap up, but the sort of couple of sentences couple of headlines that come back are: confidence is growing, government is leading, opportunities are aplenty, and challenges can be navigated, and British companies should be looking closely through the various business councils and missions, and hopefully once things open up and red lists become green lists, and all the rest of it, we can engage more in person.
To add on what you've mentioned today, the government is wearing the investor's hat. So today, whatever rules and legislations that are being announced in Dubai and UAE is mainly government is wearing the investor's hat. So this really gives comfort. Very clear rule and regulation that is launched. It gives comfort for companies to come and do proper business.
Absolutely. Thank you so much.
Elaborate just for a few
10 seconds. In 10 seconds.
In 10 seconds. One of the issues is the new activities, no initiatives that we do in Oman. Is that the government now is trying to make up pre-visibility studies feasibility studies for projects for investors to come in. So the investor, a British investor wouldn't have to come and explore the market and look for a partner and try to gather information. The projects are ready, feasibility studies are ready. And as for myself, I've been engaged in this, and I prepared over 15 feasibility studies for projects for companies to come and to invest in. And this is just in one city. Imagine if we do this for the rest of the country. I think foreign investors have no problem of coming in, and even if they don't have to look for information. Information is ready, the projects are ready, the financial statements are ready. And this is actually a new approach to foreign direct investment. So we're making opportunities ready to be captured. And this is a new approach.
We'll end on the 3 I's. So we know investors need information, but they also need independent information. And on that note, I'd like to thank our wonderful participants. I'd like to thank our wonderful speakers. Wishing a very, very good luck to England later on in their efforts against Germany. And on that note, I apologize to my colleagues at Ad for hosting us, for going a few minutes over. And from me, goodbye and back to Ed. And of course, you can continue these conversations through the platform. And of course, I know Saud, Gabriella and Ashraf would like to continue the conversation, as would I. Thank you very much and have a wonderful rest of the day and conference.